One successful contrarian is this week's great investor. He is Robert Kleinschmidt, President and Chief Financial Officer of Tocqueville Asset Management. He has been managing the Tocqueville Fund since 1992. And over the past 10 years, his fund has outperformed 94% of its large blend peers and handily beaten the U.S. stock market. And he has earned a reputation for picking out of favor or beaten up sleepers in the stock universe. My starting point, he says, is to be opposed to the prevailing opinion. That's because following the consensus, he explains, is a very hard way to make money. The consensus view is usually priced into the stock. So Kleinschmidt scours the new low list with an eye for stocks that will turn around in 3 to 5 years. Kleinschmidt is a bottom-up investor, looking at each company on its own merits. But as a global investor and an economist, he also has strong views on economic policy, including the state of the dollar. You told me recently that the greatest gift that the greatest generation gave us was our reserve currency. And that we can borrow and pay off our debts with our own printing press. Why has our reserve currency status been so important to the U.S.?
Well, because we're the only country in the world that can run the kind of deficits that we've been running for those longer period of time as we have without the international markets rejecting us, because what we're printing is what everybody else in the world thinks of as the real money, or has thought of as the real money. It's meant more of a store of value to them than their own currencies. And so, in fact, we have this golden goose, and we get to lay the eggs whenever we want, and for the longest period of time, people around the world have been accepting it. So it's been a great advantage, and it's always a great advantage to be in the situation of the country that has the reserve currency. But that status doesn't last forever unless you take very good care of it. And the problem with our own situation right now is that it's so tempting to abuse it because there doesn't seem to be a penalty associated with it until it's too late.
So is there a way, do you think, that we could reverse that we could extend our reserve currency block of time allotted to us?
I think it's going to be very tough. And let me just give you some rough statistics. We have a $9 trillion government debt. We've got a $100 trillion government current value Medicare and Social Security liability. So you add those two things together and say over $100 trillion, $109 trillion. The U.S. economy, the GDP is $14 trillion a year. So that's how many years worth of output do we have to catch up with that debt? And unfortunately, while we were trying to catch up with it, the debt is going to continue to grow. The taxes that we can collect have been around $2.5 trillion, maybe $3 trillion. That's about as much as you can expect. If you start taxing more than that, the GDP growth will shrink, and you're not going to get the same amount in the out years. So if you were looking at it like I do as a company, you wouldn't buy a company with $100 trillion worth of debt and revenues of $2.5 trillion a year. I mean, that would be a junk bond. And the truth is that we're already more or less as a country at junk bond status, and the only reason that that's not apparent to everyone is that we happen to be sitting on the reserve currency.
So right now, for instance, one of the things that you have done, earlier this year, it is short the U.S. Treasury bond.
Well,
is that something, if one, were to do something, short something for a long term, which can be very expensive, but is that something one?
Well, I think that's a good short,
and
it's not terribly expensive because the long rates are less than 4%.
Right.
So this is, I think, a real anomaly.
You and I had also talked at one point about the fact that you have these big macro trends, for instance, that you look at. But then the reality is, as a money manager, you have to take advantage of inefficiencies in the market, and you take your contrarian view towards the market on a kind of a day-to-day basis. So as a contrarian looking at the U.S. stock market right now, for instance, and then we'll talk about the global market, where are you seeing opportunities?
Well, you're absolutely right. If you're going to be a good money manager, particularly a value contrarian manager like we try to be, you can't let these big picture views cloud your vision. You still have to buy stocks that look cheap and that you think can do better over your investment time horizon.
Right, and your investment time horizon is 4 to 5 years.
Yeah. So I mean, some of the stocks that I've been buying, you know, more or less fly in the face, almost, of this larger kind of picture. In part because they're cheap, and in part because they're not widely followed, and there's an opportunity that they could get better. So, you know, theoretically, I'd like to own things that are inflation resistant and are plugged into the global economy as opposed to the U.S. economy, and, you know, are not dependent upon the dollar. And if I can find those things, I will. But I'm also buying things that are very much more parochial. Like I mentioned to you, we bought some St. Jude Medical just this past week because the stock fell out of bed, and it's been a good growing company, and it's but it has nothing to do with these larger issues. It had to do with, you know, pacemakers and the baby boom generation getting older and all those kinds of issues, and very stock specific, you know, selling at less than 10 times earnings. We bought Fidelity National, which is a title insurance company, which in title insurance I've always thought has been a pretty good racket. And now there are really only 2 players in the market because there's been consolidation as a result of the real estate collapse. And if there's a return in the real estate market, which I expect there will be in due course, in part because of the inflationary and dollar issues that we mentioned, I think that their business is going to do better and the stock is cheap. So those are both, you know, pretty mundane, stock-specific kind of names, but yet if you're a money manager, and particularly in the kind of market that I see going forward, you've got to find specific individual names that can do well on their own. If you start playing the big themes, the overriding theme is going to be there isn't a lot of return in the market. So there's not a way, you can't play the overriding themes because there's nothing there. You have to buy specific names, and that's what we focus on as money managers.